Lots to talk about this Tuesday. Joining me is Peter Hugg on this edition of For Pete's Sake. Pete, thanks for coming on today.
You're welcome, Alex.
All right, Peter, let's start off with the wedge in gold prices that you've been talking about. You mentioned it in your commentary this morning. Now, what do you see happening with prices of gold?
Well, I think there was a relatively, I won't say significant, but probably a $20 risk premium built into the Ukraine situation. And, I don't think the Ukraine situation, albeit the elections are now over, is behind us. I still think that there's going to be some internal issues in the Ukraine until they sort of sort through how they're going to move forward. But the fact that the election is now over, sort of buy the rumor, sell the fact, took some of the risk premium out of the market. They now at least have technically a leader. From what Putin has been saying, he will support the Ukrainian vote. So that took some of the risk premium off the table, and the wedge that had been in place, the 1287, 1305 wedge that had been in place for pretty much almost the last 3 weeks, finally succumbed to the pressure, and the 1287 support broke, and gold immediately moved down.
Let's move over to economic reports this morning. Now, consumer confidence out at 10, you had durable goods out even earlier before that at 8:30. What did you make of the data that came out?
Again, durable goods were up in April, better than expected. Consumer confidence came in at the mid-level of the expected range, but still on the stronger side. May coming in at 83, up from just under 82 for the April consumer sentiment reading. So there seems to be more confidence in the U.S. economy. There is obviously still some significant capital flows flowing into the equity market, which also creating headwinds for the metals. So overall, it's been on a forex basis dollar bullish, which again has also created some headwinds for gold and silver. What concerns me though is that I think the 1278 level may be breached, and we may get again gold down to the 1262, which in my opinion is the whole Maginot Line for gold. We lose that, I think we may be seeing the lows of last year, but I'm ahead of myself.
Now, Peter, there's also Europe. Sunday obviously was the big day for the Ukraine with the presidential elections, but there was also European parliamentary elections. Now, what do you make of all that? We saw this Eurosceptic movement kind of not throw a wrench into things, but kind of mix things up for the EU. What do you make of what happened over the weekend?
Europe is starting to concern me. The elections in Europe over the weekend are indicating that there is a growing sentiment in Europe to disassemble the euro and to leave the union. Now, on the surface of that, it would seem that you'd want to be negative gold because obviously you would expect flows coming into the US dollar. But there may be something bigger at play there. And, these economies breaking out independently is going to create some massive capital dislocation in Europe. And I'd be very careful being aggressively short the gold market. I certainly wouldn't be selling any insurance positions here. There's something brewing in Europe, and it looks like it's going to come to a head in the summer months when the markets are generally thin. So I would not be surprised to see some fireworks coming up over the next couple of months in the metals markets.
Let's bring it back a little more near term with GDP out this Thursday. Now, do you see this having any effect on gold or Fed policies?
Well, I think the GDP number is definitely not going to be a negative like it was in the first quarter. I'm not in the camp of looking for a 5% GDP second quarter number. I'm more looking in the 3.25, 375 number, which would bring first half GDP growth in around 2%, which again, I think is still anemic growth, but growth nonetheless. That type of number, I think, will keep the Fed on course. I firmly believe the Fed will continue its tapering program until it's over, which at current timelines indicates somewhere in the neighborhood of September. So unless we get a massive surprise, and I think the surprise we need to watch out for is a surprise to the downside. If second quarter GDP comes in under 2.5%, I think that could be very price positive for the metals because it would indicate the Fed may need to rethink its policy.
All right, Peter, let's see what you got as a trading range for gold this week.
Well, you know, I trade the range from the perspective of support resistance. As long as 1277 holds, I see the range between 1277 and the last support level of 1287 being a logical trading range. If we lose 1277, I do think a move into significant support in the 1262-ish, 1264 range is in the cards.
Excellent, Peter. Thanks for your time today.
You're welcome.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com. Have a good one.